Hi Dan, it's Trevor.
Hello there, Trevor. Can you hear me?
Yes, I can. Can you hear me all right?
I can indeed. I can indeed. Let me just make you the boss. Okay. You are now the presenter.
Okay.
Okay, 1 second. Can you hear me still?
I can.
Okay. Okay. Everything looks good. Euro USD daily.
Okay.
Okay, you can see everything.
All right.
Yeah, we're ready to. Yeah, if you're ready to get started, Trevor, we can get started.
Let's go. Do your intro.
Okay. Hello, everyone, and welcome. Thank you for joining our technical analysis webinar with Trevor Neil. As always, we'll aim to get everything covered in 30 minutes. And if you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar window. I'm sure you all know how to do that by now. Also, just a reminder that the handout can be downloaded from the handouts tab of your GoToWebinar window. So if you're new to trading, it will help you understand the different indicators that Trevor's talking about whilst he's doing the webinar and his thought processes when he's using them. If you have any problems locating or downloading it, please just let me know and I'll send you a link or I'll help you find it. For those of you who don't know Trevor, I'll just give you a brief intro. Trevor's a veteran technical analyst and trader. He worked for large companies such as Merrill Lynch and Bloomberg, where he was global head of technical analysis. He's also the founding member of the Society of Technical Analysts in London, which is an institution that accredits other technical analysts. So without further ado, I suppose we can get started. Trevor, what do we have this week? I noticed it was dollar weakness taking a breather.
Yes, that's right. So dollar weakness taking a breather. I don't think, in my opinion, that's the end of it at all. So it just, I believe that many of these moves are just reaction moves within a longer term trend. But let's break them down. They're not all the same. Some are clearer than others. So starting with the euro, we have got a bull run still going on here. I know for the last 3 sessions we've been going down, but this followed on from a loss of momentum, which we had recognized towards the end of December. And so although we made this series of new highs here, it had lost the power that it had had in November and December, early December. And so we've made a high, higher, higher, and higher high, but with the RSI here, lower high, lower high. So it was a warning that the market should correct or pause within its uptrend. I do think it's still an uptrend. We have got, here is the 20 period moving average, here's the 50 period moving average, here's the 200-day moving average. They're all in the right order and still wide apart, which indicates strength in the market. And just to look at the weekly chart, so here each bar is a week. The crucial event was the breakout of this consolidation, which we talked a lot about, and the powerful move there. And I do think that that we're on our way up for a leg which will be as long as this leg here from the April 2000 low up to here, pull back to here. And I've done measurements from that. We've made 50% so far. 61.8 is the 2018 high. And so we can certainly expect some resistance there. But, you know, ultimately, I think we're headed for 129.90, let's call it 130 there. I think it is bullish and it's going to resume its bullishness. It's obviously, it doesn't go there in a straight line. We zigzag our way higher, and I think we're on a zag now. What will change this is if the weekly MACD crosses. I am a little bit worried about this. So lower high here with a higher high here, meaning we haven't got the power on this leg that we had on the power of that leg. So we have to be aware of that. But at the moment, I think that this is just a normal reaction in an uptrend. There's quite a lot of support around. We're coming up to support 121.50. We've got support here at this December low here at 120.50, and then much more substantial support here at 119.20. I think it is something like that, 119.25. There. So I'm looking at these support levels. I'm looking at the behavior at the pullback. If it starts to give us long lower shadows, consolidating, small bodied candles, then I think that maybe it's about to stabilize and resume its uptrend. Let's look at sterling cable. Just look at the weekly chart firstly. The big significant breakout was the 133 level here, and it's cleared that properly now. And it's moving ahead. I do think that this is going to have very little trouble reaching up to its previous double top there of 2018 at 140 area, and I think that's where we headed. But like all these things, it's not a straight journey. Here is the quite clear channel that we've got for sterling, where we've bounced off the top of it at the beginning of the month and eased back a little bit now. It probably will ease back a little bit further, but there's ample support around here, and I'm looking for signs of it stabilizing, and these are the things I'm looking for: is small bodied candles, long lower shadows, those sort of things, picking up rejection of the fall. But I still think that this is going to continue to work higher. Swiss franc. Oh, something funny happened there. Again, it's very important to have a big picture look at this. I know we don't trade in this horizon, but we need the context for things. Long fall in the dollar. That's of course strength in the Swiss franc itself. Pushing down, big break at 90. We talked a lot about that and the significance of it, and we've come down here now. We had mentioned previously that the 2014 low, I'll bring it in here, and we just touched it here now. So there's 2014 low, and we just touched it there. So predictably, there is some sort of consolidation pause occurring, but I think it's just temporary. So I think that we're yes, we're rallying. It's got a divergence. It had a divergence too. So we had a low, a lower low. We had a series of higher lows in the RSI. So it was losing momentum on the downside break following the 90 break, but there is good resistance above, and I expect a retest of that low eventually. But if we do break 189.18, it is this high here, then we could retest 90. I don't think it will, but it could do there. But I think that this is such a powerful resistance now that we're in a new era, which is extreme strength in the Swiss franc. Norwegian, got to mention that.
Can you hear me?
Indeed.
Yeah,
yes,
we have a request from Jeremy. Thank you for your request, Jeremy. To look at the GBP JPY. Is there any chance you can squeeze that in? I wasn't sure if you had that in mind today.
I don't have it on my list here, so I'll put that in. And please ask questions. Please do ask questions.
Yeah, the more the merrier. The more questions we have. Jeremy says thank you for taking a look.
Okay, so Jeremy, thanks for asking. Okay, let's go to the weekly first. I've got this right, Jamie. Yeah, so this is very. Have I got this? No, I haven't. Just bear with me a sec. Right, there we are now. Okay, so what we notice about this is that GBP JPY is in a downtrend. We've got a lower highs series here. This is the weekly. This is on the weekly chart, so the long-term perspective, and we're moving up towards the downtrend line. Now, one of two things is going to happen here. It's either going to fail once again, 1, 2, 3, 4, 5, 6 or so attempts. Maybe it's going to be the 7th time, and it will fail and continue its long-term trend, or it will break. So it's one of the two things. So it's a test, and it will either break or fail that test. So what is happening here? So is this right? Sorry, excuse me, I just want to make sure that I got this right. GBP, yeah, I have. Okay, so we're rallying, not very strongly, and to be very frank with you, I think given the state of the Bollinger Bands, the moving averages, the weakness of the rally itself, as shown by the RSI, I think that this is vulnerable to turning down again back in the direction of its long-term trend, and so I think that it's vulnerable to turning down and failing. Sorry, I'm just thinking aloud, but that's not correct, is it? That's a wrong graph. Ah, that's better. Okay. Yeah, no, that's right now. The price is right. Sorry. So this is us testing the downtrend line, which you have to imagine is across the top here. So forget what I said previously. It is sort of consolidating. The RSI itself is at 55, so it's neither at any sort of extreme. The MACD is very flat, indeed close to zero, and so this is just showing the sideways consolidation here. Is it showing signs of particular weakness? No, it's not as yet. So my answer to this, sorry to be thinking so on the hoof there, but my answer is that we're in the long-term downtrend. We're retesting the downtrend line. So far, it's unclear whether it's going to break or it's going to fail. I think more likely of the two that it's going to fail. And it will, this current rally that we've had for 2 months now, will peter out and the long-term trend will reassert itself. But we haven't got any signs of that happening yet. So I think you have to watch a bit on this. Okay, now what on earth has happened here? I've got all those duplicate copies of that. So I'm going to jump onto the Norwegian crown, go to safer territory here. So here we are. This is the daily chart. Let me show you the weekly first. But this is of course, this is the US dollar Norwegian crown. So falling is a rising crown. We are going down. The trend is very strong. We are into an area of support, but we're pushing through it, and we're really at the bottom of it. I'll draw another line here. So this zone here, and we're pushing through it very hard indeed, and this looks very likely that we're going to get through it. So I think that it's the Norwegian crown will strengthen further. So today's action, I think, is just counter trend trade, and given what's happening elsewhere, really this looks very reluctant to participate in the dollar rally move. So I think up for a day or two in this, but then the trend will resume itself, and I think there'll be opportunities to get back on the side of the trend here. I'd like to do next, I think we need to speed up a bit. I'll do the commodity currencies, Australian and the Canadian dollar. Okay, so here's a beauty here. This is the Australian dollar, and in a narrow channel here, I would say. So this rising means it's the Australian dollar rising. It's in a very defined and narrow channel. There are several support points below us if we were to break out of the channel on the downside. It has lost some power, as we can see from this bearish divergence in the RSI. It's going up, but it's lost some power. But there's no top in place yet, in my opinion, and so I think it's really it's still on its way towards those highs of 2018. So I wouldn't be surprised if it picks up, at all surprised if it picks up support on this very narrow trend line and do it again like it did here and like it did here. If it breaks it, I think there's plenty of support, and this has got further to go on the upside for the Australian dollar. Here we've got the Canadian dollar. Of course, this is expressed in reverse. I'm having a really bad day of here is the US dollar, Canadian dollar. So this is the US dollar going down. Major break, which we've participated in nicely. We've got various levels of support, but this is still long-term bearish in my opinion, so bullish for the currency. And so we've paused a little bit. We've had a bullish divergence, which means that this move is not particularly a surprise that it's pausing, but I think that this pattern of lower highs will continue, and somewhere between here and the 129.50 area it will turn over once again and resume its move down. But we were warned by the bullish divergence, which we picked up and talked about last week. And then I wanted to also talk about New Zealand dollar yen, sorry. So New Zealand dollar is a good one to participate in if you're going against the US dollar, but better against the yen. Here we are. This is the daily chart, but let me just show you the weekly chart of it. If I can, here we are. So we had that consolidation. We broke out, it's powered ahead, it's broken this high. It's now ready to test this one. I've done this measurement, Fibonacci projection measurement, starting here to here, then to the pullback level here, then projecting up. We've gone through the 50% level. I think we're headed to the 61.8%, which is 76.17. And then I do believe that we're headed up to 80.78 area, which is right back at these 2017 highs up here. So I think this is a good one, and we're having broken this long-term downtrend here, and having got so excessively weak here in the New Zealand dollar that is springing back very powerfully indeed. I'll just say the South African rand and the Mexican peso, I'll just talk over them. Both of those were the leaders in the, if you wanted to go against the dollar, but it's a bit over for those ones now. The Mexican peso has come down to substantial massive area, multi-year area of support here. And so that's over, really, the game is over. And then also in the South African rand, the same here, a massive multi-year area of support. And this has bounced quite hard as it hit that area there. So that was something that we had expected. Going to Bitcoin, I had my thoughts about Bitcoin. It seems to hate Mondays. So I think last Monday, we were talking this time last Monday, and we were making new highs. This was here. This was Monday last week. And then as soon as the call stopped, we had this great washout here, moved down here. And then by the next day, we were on our way up and making new all-time highs there. So we had a one-day massive washout. Looking at this candle on its own, it was a very bullish candle. I know at the time it didn't seem like it, and when we were trading down this low, it didn't seem like it. But what happened was we opened very strongly, gapping up. We traded down very hard indeed, massive bout of profit taking, but then it was greedily absorbed. And so this is called Takuri rejection, dipping your toe into the cold water, and we had this long shadow below. People were gasping to buy these cheap Bitcoins at 28,000 area here, and we powered ahead here. So even though we had a black bodied candle, and we in fact finished down on the day, this was a very bullish candle in Japanese. If you were a candlestick trader, you would buy on the break of that high there with a stop here. Now we've got another one here. Now the warning here during this week has been this bearish divergence. We haven't seen it before. See here, as we've gone up strongly, we've got new highs in the RSI. It's confirmed it. So, but here we had a lower high at the end of last week on the RSI, which was a warning for us. And then we had this big sellout. But doesn't this look very like last Monday's candle? If we finish strongly like this, then it's probably a rather bullish pattern. Not as bullish as this one was, because it was at the high. We're below the high here. But this rejection, if we manage to close with a long shadow below, means that people really are greedy to buy cheap Bitcoins when they get the chance to buy them. I don't think this is the top, incidentally. I think the top in Bitcoin will be made in one of two ways, wherever it is. It'll either be climactic, so we'll have a massive spike bar and then a big shadow above it, or we'll have a complex top like a head and shoulders or a double top or something like that. But this, I think, given what's happening here, I don't think it would end like this. There's going to be more drama in it, or more cogitation forming a complex pattern. Okay, let's go to the S&P. Anybody got any questions, Dan?
Not so far, no, Trevor.
Oh, I thought there'd have been some thoughts on Bitcoin.
Well, we've just received one in yet, and I haven't had a chance to read it. Yes, a chap called Gary has asked us to take a look at gold, but I have a sneaky suspicion we'll be going that way anyway.
Yeah, we will be doing gold, yeah.
Okay, thank you, Gary. Hold on.
Yeah. I mean, gold, well, a lot to say about gold. Here's the S&P powering ahead here. I've done this measurement for the S&P for setting my objectives. I took the March low here up to this high here, then pulled back to here. So this is A, B, C. I took the length of A, B, added it to C, and that gives us, we've just broken through the 38.2% level at 37.44. This means we should go to the next level, 39.10, then 4,000, and then 4,600. So that's on the basis of the power of the flick back after the March low, which was extremely powerful. Then when the bears got control, it was a kind of pathetic, brief move, and then we're on our way back up, and we were up to new highs. So the bulls are very strong, the bears are not very strong, therefore be bold about the next move up. And that's why I've drawn these big minimum price objectives like that. The FTSE, looking good. Well, it will look good when I can see it. Here we are. So here's the weekly of it. The key thing was breaking this June high here. It broke that. We powered ahead strongly last week, a very nice move last week, and we can do some measurements now.
One second, Trevor. One second, sir. Are you looking at the FTSE there or the US 500? Because I'm seeing the US. I'm seeing the US 500 on your screen.
Ooh. Now I'm seeing the FTSE on my screen.
Oh,
let's see if the screen changes.
There it is. It just changed over then. I don't know what you did, but it just changed.
Oh, it was a bit slow, so was it?
That's US 500.
And
UK
I just
100.
back, now gone back to the FTSE.
Gotcha. Okay.
Are you seeing the FTSE?
Yes.
Yes. Okay. Great.
Weekly.
Okay. So we had a great week last week. But let's get it in context. If we take the March low here, A, B, this flag here, flagpole, flag, the breakout point here, measure from the breakout here. So that's why I put 0% here. We've gone through 50, we've gone through 61.8, which was back at that June low, June high, sorry. We've powered ahead here. I think we're going to the 100%. So that's 100% of this length here. And that takes us up to 7,100, which takes us into this consolidation here, which is quite substantial. It's about 12 months wide. So I think, as I said before, the journey through this area should be easy, frictionless, because we dropped so fast. And so far, that has been the case. But we get substantial resistance starting at 7,100. So I think that it should continue to move forward here relatively easily until it gets to 7,100, where it picks up resistance. It is overbought, I know that, but it's still pointing upwards. The German market has broken up at last. It's made its break. So on the weekly here, let's just go back a little bit longer to give the context for this. So look at these highs here, 1, 2, 3, and at last we've broken to finally make a new all-time high for it. This is very significant, puts all this as support below, and it looks now very constructive indeed. So just go back, put that back to 5 years. The next chart. So we're moving ahead nicely here. The RSI is okay, no divergence here. The MACD is looking okay. Here the trend is building, the moving averages are splaying out in a rainbow fashion, and so that's constructive. So it's gaining strength here. I know we're down today, but in the overall it's continuing to look good. So I think Germany will push forward with substantial support below it. But as you know, my favorite has always been the Japan 225, and this is because of this weekly chart here. What a chart! Let me go back 20 years. Okay, I need to go back even more than 20 years, believe it or not, because we've been here before. There we are. That's where we are now. So we broke those highs, which was a very important breakout. We're breaking this high. This takes this one here, which would be at 33,000 here, and then the all-time high is very much a target now, which is 37,700 for it. So who'd have thought? These are back in the 1990s. We're looking at here. Probably weren't born when this was. Well, probably were, but when we were last at these levels, and so here we've had that narrow consolidation. We broke out of it. It's a classic, isn't it? Broke out, nice powerful bar there. Retest of the break point here. No, it's there. Retest the break point, and then we've powered ahead. So we're on, the journey is upwards for this one. I think this Asia in particular, I keep saying, not particularly Japan. If you could ever trade the Southeast Asian markets, they're even stronger. But of the biggest market is of course Japan, and this one looks extremely good. Well, next on my list is gold. Now this was a horror in a way, really, because it broke up. Let me go to the weekly chart here, and then collapsed. So we had this break up here. I had this triangle, descending triangle drawn in. Descending triangles are normally bearish, but we broke up here, and we broke up by a lot. But look at the shadow on that. It rejected it when it did it. It's no good, of course, if you were long, but you can say that from a candlestick point of view, that was a very weak candle there, that rejection here to Curry in it. So let's make it a bit clearer. There it was there. So now what are we doing? Well, we're now below. We're very close to the apex of the triangle, but we're now below it again. And it's now looking negative here now. Gold looking negative. What about on the daily chart? Well, we had that frightful day on Friday. In fact, the whole week was terrible, or the second part of the week was terrible, and we've come down. Honestly, it's coming down to support in here. It's churning, really. It's really, I know it's we've had a severe sell-off in the last few sessions, but it's really building up into a pattern which is, to me, looking worryingly toppy pattern, overall toppy. I may be drawing a parallel line for this later, but it does not look good at all now. Really, this sort of churning around below 2,000 is making it look quite unattractive as an investment, in my opinion. Then now let's go. We've got a couple of minutes. Pfizer I mentioned last week as one of my short positions, but I'm out of that now. I wanted to tell you that. Let me just show you the graph, which I thought was very surprising. If you asked anybody, what stocks you think would be doing well at the moment, they would have said probably Pfizer and Zoom, or as it happened, the two of them were not looking good at all. So here we had Pfizer. I was short of it. Now it's bottomed out. It's lost all its momentum on the downside. It's come back to major support. That's it. That's the reaction over. It probably will go up quite strongly now. The other one was Zoom, which was a surprise that it was so negative, but that's still going down, Zoom, and that's the one is still short of, but I think that this is coming down to around 250, 260 area here, and it'll probably come to rest about there. But that's quite a surprising move, isn't it? The Tesla, we've got to mention Tesla because well, it's definitely had its battery on recharge, and here's the weekly chart of it bursting through the 100% projection level from A to B, pull back here. This is a log scale if it looks unfamiliar to you. So every doubling of price is a unit in it, which is appropriate with a stock like this that is moving ahead so strongly to proportion of the move. So the measurement I've done for the Fibonacci projection, A, B, I think it was B, C, and then we're through 100% there now. That means to me we're probably going to 161.8, and usually for me that is the next stop, and so that's 1032, so through 1,000. So that'll be a big cheer, won't it, when Tesla goes through 1,000. I've just got a chance to mention one more, I hope, which is Apple, and so Apple is hesitating at the September high here. This is the weekly chart of Apple. It's hesitating there. We've got this rising line here, ascending triangle. It normally resolves itself to the upside. The weekly MACD is positive. The RSI is sloping down. And this is really describing the pause that's going on here. But I think that that it's getting ready to make another swing higher, which might be the one that takes us out. So we had the dip here, took the RSI down below 50, which for me is a setup in a bull trend for a security. It's pushed up here now. I think that we're starting another leg higher, which should take us through this short-term high here, which is, as you know, that high there, which is crucial. So if this swing takes us through it, that'll be a new all-time high for Apple, and it will rejoin the race with the rest of the US stock market powering ahead. So I think that Apple is about, I suppose in short, I think Apple is about to make a new high and join the other strong constituents of the S&P.
Mm-hmm. Well,
right. Do you have any questions?
Yeah, we do actually, Trevor. Thank you, Andrew, for your request. Andrew wants to take a look at silver, if you don't mind.
Oh, silver. Okay.
If you can find it.
Yeah, okay. Yeah, I've managed to spawn lots of new securities in there somehow. So this is silver weekly, first of all. I've measured the retracement, incidentally, from the March low to the high here, and we traded back to 38.2% here, and it's holding at 38.2, and it's fairly steady at that. Going to the daily chart now. I don't know why my icon is having such trouble waking up today, but on Friday we had the very sharp sell-off there, but it's in the context, I think, of a rising market. We had a big lower shadow here, with so far having another day like that. Here with a lower shadow here, these are bullish when you have lower shadows. This is rejection. This is people buying. So I wouldn't be surprised if this finds its footing, and this is simply a correction. We've got a low, higher low, maybe a higher low here, and we will continue our journey higher imminently. Of course, all bets are off if we break this low here, particularly if we break this low here, 23.5 there, and you know, catastrophic would be breaking the 21.85 low here and the November low. But I don't think personally that's going to happen. I'm looking for this as to stabilize and then resume its up move. So many people would see this kind of action as an opportunity. They're coming into support, holding quite well so far with the shadows below. That's constructive. The RSI could be about to turn up. I wouldn't say because it's low you should buy it. It's low because it's weak. But if it turns up, then it looks good, and it's a good place to turn up because it will continue the pattern of higher lows and also higher lows and also in the consolidation itself. And just while I've got your attention, if I can indulge you one more, I always like to look at the gold-silver ratio. So this is gold divided by silver. So when this is going up, that means gold's outperforming silver. That is what is happening now. And so that sell-off, that vicious sell-off on Friday on the silver really hurt the ratio quite a lot here. So we've turned up, so gold outperforming. But again, look at these shadows here. So this might be about to turn, and gold and silver resume its dominance over gold again. That is the long-term structure of the market. Silver recent long-term recent structure of the market has been silver to outperform gold.
Well, thank you very much, Trevor. I hope that answers any questions you might have had, Andrew. That's it, I think, Trevor. Thank you very much. Okay. All good today. Just to let everybody know that there'll be the entire video of this webinar will be put on our YouTube channel in the next couple of hours or so. We need a bit of time to get it edited and put it up there. So you can also re-watch the video there if you missed any charts or if you arrived late. That's it for me, Trevor. You have any more remarks, comments to make?
No, I mean, God, let's look at all that rubbish that's coming there. Let's just go out looking at Bitcoin, because you know it can change such a lot while you're talking. But still, we've still got that shadow below at 38.2% retracement level. So that would be a good place for it to hold. At the moment, it looks like it is holding, and the rejection of that shadow is constructive, and so it can find its footing. And it was due for the pullback. We had that bearish divergence, which warned us if you're willing to pay attention to it. All right, my friends, thank you very much indeed. Thank you, Dan, for looking after us so well. I hope you have a great week. Stay safe, and may the trend be with you.
Thank you very much, Trevor. Thanks very much, everyone. Bye-bye now.
Bye-bye.
Bye-bye. Bye-bye. Bye-bye.
Bye.